Ever wondered why you got approved for that car loan but your friend didn't? Or why your interest rate was higher than you expected? The answer often boils down to three little digits: your credit score. But not just any credit score. Today, we're diving deep into one of the most important ones, your Equifax credit score. What is the Equifax credit score range, and more importantly, what does it mean for you? Let's find out. Now, before we jump into the numbers, let's quickly recap what a credit score actually is. Think of it as a financial report card. It's a three-digit number that summarizes your credit history, basically how well you've managed borrowed money in the past. Lenders, like banks and credit card companies, use this score to assess the risk of lending you money. A higher score generally means you're a responsible borrower, making you more likely to get approved for loans and credit cards with better interest rates. There are several different credit scoring models out there, and each uses its own scale. That's why it's possible to have slightly different scores depending on where you check. Today, we're focusing specifically on the Equifax credit score range. Equifax is one of the three major credit bureaus in the United States, alongside Experian and TransUnion. These bureaus collect and maintain your credit information, which is then used to calculate your credit score. So, what is the Equifax credit score range? The standard Equifax credit score, often referred to as the FICO score based on Equifax data, ranges from 300 to 850. 300 is the lowest possible score, indicating very poor credit, while 850 is the highest, representing exceptional credit. Now, simply knowing the range isn't enough. It's crucial to understand what different score ranges mean in practical terms. Let's break it down. 300 to 579, poor. A score in this range signals significant credit challenges. You likely have a history of late payments, defaults, or even bankruptcies. Obtaining new credit in this range can be extremely difficult, and if you do get approved, expect high interest rates and unfavorable terms. 580 to 669, fair. This range indicates that your credit is improving but still needs work. You might have some past credit issues, but they're not as severe as those in the poor range. Getting approved for loans and credit cards is possible, but you may not qualify for the best interest rates. 670 to 739, good. A score in this range is considered good and demonstrates a solid credit history. You're likely to be approved for most loans and credit cards, and you'll generally qualify for decent interest rates. This is a solid place to be, but there's always room for improvement. 740 to 799, very good. This range signals excellent credit management. You've consistently paid your bills on time and have a strong credit history. Lenders view you as a low-risk borrower, and you'll have access to excellent interest rates and favorable loan terms. 800 to 850, exceptional. This is the top tier. A score in this range demonstrates exceptional creditworthiness. You're considered a highly desirable borrower, and you'll qualify for the best possible terms on loans and credit cards. Now, it's important to remember that these ranges are general guidelines. Different lenders may have slightly different criteria for what they consider acceptable. But these ranges offer a good benchmark for understanding where you stand. So, how is your Equifax credit score calculated? While the exact formula is proprietary, several key factors influence your score. Payment history, 35%. This is the most significant factor. It reflects whether you've made your payments on time. Even a single late payment can negatively impact your score. Amounts owed, 30%. This looks at how much of your available credit you're using, also known as your credit utilization ratio. Ideally, you should keep your credit utilization below 30%. Maxing out your credit cards can significantly lower your score. Length of credit history, 15%. This considers how long you've had credit accounts open. A longer credit history generally results in a higher score. Credit mix, 10%. This evaluates the variety of credit accounts you have, such as credit cards, installment loans, like car loans or mortgages, and retail accounts. Having a mix of different credit types can positively impact your score. New credit, 10%. This looks at how often you apply for new credit. Opening multiple new accounts in a short period can lower your score, as it can signal financial instability. Now, let's talk about how you can check your Equifax credit score. You have several options. Annualcreditreport.com. This website is authorized by federal law to provide you with a free copy of your credit report from each of the 3 major credit bureaus once every 12 months. While this site provides your credit report, it doesn't always provide your actual credit score. Equifax website. You can purchase your credit score and report directly from Equifax's website. They also offer subscription services that provide ongoing credit monitoring and alerts. Credit monitoring services. Many third-party credit monitoring services offer access to your Equifax credit score and report, often as part of a broader package that includes credit monitoring and identity theft protection. Credit card companies and financial institutions. Some credit card companies and financial institutions offer free access to your credit score as a perk for their customers. Checking your credit score regularly is essential for maintaining good financial health. It allows you to identify any errors or inaccuracies on your report and track your progress over time. Remember, maintaining a good credit score is a marathon, not a sprint. It takes time and consistent effort to build and maintain a strong credit history. So, to recap, the Equifax credit score range is from 300 to 850. Understanding where you fall within that range and what factors influence your score is crucial for managing your financial well-being. By practicing responsible credit habits, like paying your bills on time and keeping your credit utilization low, you can improve your Equifax credit score and unlock better financial opportunities. With that said, thanks for watching, and until next time.